In this video, traders, we're going to look at the fine line between adapting your trading plan and discarding it completely. Stay tuned. Hey guys, warm welcome to you. Alright, so we're going to talk about trading plan. What I don't mean is the broad plan of your risk management, what times you're going to trade, what instruments you're going to trade, what setups, etc. What I mean by trading plan is what are you expecting from the upcoming day? So if you're a day trader, then how are you expecting the market to play out and how are you looking to position for that? So an example could be, okay, well, yesterday we had a strong trend day in the US indices. So today I'm expecting a narrow range day. So I'm also expecting to be fading extremes. I'm looking for mean reversion plays, double tops above prior highs, double bottoms, preferably for an uptrend at prior support levels, something like that. And so you've got a broad approach for what you're going to do, and it's your plan, and you're trying to work around your trades around that plan. Now, the fine line that we have, we'll talk about in this video, is when do you adapt the plan and when you discard it completely. So let's look at that as an example, right? We've got a scenario where, let's say the prior day, we've had a really good solid drive, okay? We've closed up at highs, and now we're looking, and the next day we're expecting something like, let's get a purple, so there's expectations. We're expecting something perhaps like this, maybe a little gap down, depending where, maybe a push higher, maybe a fake. You know, we're expecting this kind of action, or at least till midday, and after midday maybe the scenario changes. For me personally, I kind of have a thesis up till midday, and then really I'll adapt it and adjust it depending on what I've seen before that, because obviously the type of trade environment we've had here will affect what happens in the second half of the trading day. So your thesis might be, okay, well, I want to stick with the trend. I want to kind of buy in this zone here. Perhaps there was support from yesterday, whatever it may be. I want to buy a double bottom, I want to buy a fake out, whatever that may be. But that's your trading plan, your thesis. The question we've got is, when do you fine tune it and when do you discard it completely? So let's say, for example, this thing now shoots off to the upside, and we'll use a black one for this. Let's say, you know, just suddenly rips off the upside. At that point, do you say, well, it's not playing out as I expected it to, so I should revisit and kind of look again later in the afternoon, or let it play out for a few hours and then revisit and see what happens? Or should I just fine tune and adapt it and say, well, actually, I hadn't expected it to be so strong at the open, but let's see if it still does a kind of exhaustion move here and then comes down and kind of does the same thing but just shifted up. Does that still apply? Maybe that's even better for your trade thesis of buying some support level, because actually we're higher up in this exhibiting strength. Or maybe you have the opposite view and you say, well, actually, because it's already done this work to the upside, I kind of don't want to buy it here. I wanted to buy it as it was pushing down into the prior day's range. I didn't want to buy it in this no man's land. And so this is when you've got to do what's right for your trading and how you feel about stuff, because you can't, on paper, I can't stand here and say, well, you should do this, because if you feel like you will be chasing it by still taking that, then you can't undo that. You have to say to yourself, well, actually, hey, it's higher, I don't want to take it, I'm going to discard this plan completely, discard it and reassess and say, okay, well, how will I look for this afternoon? Well, let's keep with the really broad thesis of mean reversion. Well, maybe the afternoon play is to look for a noon push up, and I'll start fading it from the long side because I consider that stretch pushing down to some kind of mean here. Perhaps that becomes the fine tuning as opposed to discarding it completely. Or the flip side is you might say, right, you know what, because this is so high up now, I don't want to take this. I only wanted to take the long because we're in an uptrend here. I only want to take longs if we're down here. And in actual fact, because we've done work up here now, if we start doing work down here later in the afternoon, that becomes a completely different trade that I do not want to take. I would not have mind taking that early in the day, little push lower, but if a rejection of highs happens later in the afternoon that comes and forms what is essentially the same pattern as that later on after all that, I don't want it, in which case you're in the discard mode. So it's important to have that, at least the idea benchmarked out in your mind, for want of a better word. It's important to know when you'll say, hey, I don't mind taking this and tweaking it, adjusting it and sticking with the thing, like we said here, mean reversion, maybe I'll flip it and look to fade extremes because of that move. And it's okay to say at what point the whole thing is discarded and say, well, actually, if we do start to stretch and come back, it changes the whole premise of the trade and the whole hypothesis of the trade, so I'm just not going to take it. And having that almost red line, I know it's not going to be a specific red line, but having that kind of fuzzy area where you go, right, well, I need to do something different, means that, again, you're almost looking at it from a logical perspective. You'll say, okay, well, yes, I've got this trade plan, but if I see this kind of move, I need to reassess, and I'll take some time to reassess that. If I see it within this boundary, i.e., okay, let's say it goes up that much, then I'm still on with the plan. And so you're constantly giving yourself these structures and guidelines to work within, because as we've talked about before, and if you're a subscriber, I appreciate your support, by the way, thank you. You will know that I talk about trying to bring the boundaries in to give yourself some framework to work off. Too many markets, too many timeframes, too many things. Same with the trading plan. Gone to the effort of the plan. You don't want to just waste it just because it hasn't done exactly what you said it do, because the likelihood of that is slim. Just the probability of it doing exactly that isn't going to happen very often. It does from time to time, and it's nice when it does. But you still need to be able to adapt it, adjust it, tweak it. But at some point, the plan breaks. It's almost like a rubber band, right? If you think the rubber band's fine, stretches, it can still work, but then as soon as it goes past the point where it snaps, it becomes useless. And it's finding that sweet spot for you, the difference, the fine line between adapting your plan and discarding it. All right, guys, if that's helped, a thumbs up is much appreciated, as is your support. Subscription. Take care. Bye-bye.